Welcome to Right Side Trading, where you can learn how to trade on the right side with confidence. Today is January 31st, 2016, and we will be talking about our market weekly review. But before I get started, I do need to let you guys know as a disclaimer that we are not licensed professionals, financial professionals. We are not. So please make sure that you understand everything we cover in this discussion or this video is simply for entertainment purposes. I am not licensed. The government wants me to let you guys know that specifically, that I am not licensed. I'm not a professional. I'm just a regular guy who looks at charts and draws, a bunch of lines and come up with my own conclusion as to what I see in the market. Okay, so please do not take anything I say here as advice to manage your financial portfolios. Please make sure that you do consult the advice and seek it out, the advice of competent professionals that are licensed to do such things, okay? Because trading in the stock market is very risky and you can lose everything if you don't know what you're doing. So again, I am just a regular average guy who is just showing you some things that I see, but it is not to be taken as financial advice. Okay? All right, so that being said, let me show you what I see on the charts as to what the market is telling us. When we go to the chart of the SPX, the S&P 500, we had a big rally on Friday, all right? So what does that do for us? Is this a rally that's going to keep on going or not? The answer to me is I really don't know yet, but I am very, very suspect. I'm a very, very big suspect of this rally. Okay, so I'm anticipating that this rally should actually go down starting next week. Okay, and I'll tell you the reasons why. The first thing is we have these lines of resistance. The first one was being this line right here, my first line of resistance. We saw that the market had seemed like it was ready to turn and go back up, or pull back, not a reversal, but a pullback. We expected the market to do so on Monday. It did not. It instead came back being bearish. Tuesday, it went bullish. Wednesday, it went bearish. Thursday, it went bullish. We had a lot of choppiness, and even I was affected by that choppiness because I was not liking what was happening. What I expected to happen on Monday was what really happened on Friday. So the market did what I wanted it to do on Monday, 4 days later, okay? But in the meantime, while it did that, it was already too late. I had already got out of the market, especially when the Feds came out with their announcement saying that interest rates are going to stay the same. I really didn't care about what the Feds were saying more than I was looking at candlesticks. It started dropping really big. I knew that this was a potential line of resistance. It had came really, really close to that within a few cents of reaching that resistance, and then it just started really dropping. I took that as my warning sign to get out, and I should have waited till the next day to confirm that we were really heading down before I start shorting, but I decided to jump the gun, and I actually started shorting that same day, that same Wednesday. And so, I got a hit. I took a hit this week because I lost money because the market did not really move up because of options decay. And then I am losing money right now as we speak because then the market decided to do what it did on Friday. Now, we don't care about the news, but I'll still throw it out there. Bank of Japan came out saying they would have a negative interest rate, and that really caught the whole global market by surprise. And every single global market pretty much rallied on Friday. Okay, but what do I make of that? I don't care what Japan says, China, whatever. I just look at the charts, and I'm looking at these charts, and because of the fact that we're in a bearish market, I am very suspect of this rally. Now, when we were in a bullish market, if this was a bullish market, I would be all over this. Okay. But just like when I was in the bullish market, whenever we had a dip, I stayed away from the market, used that time to do more research, do other stuff that I wanted to do. When the market got to the bottom and reverse trend, ready to go back up, that's when I entered the market because then I knew that that next phase would be a very healthy phase going to the upside. Well, likewise, now I'm doing the same thing also, but in reverse because we're in a bear market. Okay, so this I see as a pullback. Now, how far this pullback is going to go, I don't know. But I do know one thing, that it's not going to last for too long, and it's going to turn back down unless we see things on the chart that tells us otherwise, saying that we are ready to go back into a bullish territory. Okay? So that being said, right now, we came really close to this resistance right here, which is our second line of resistance. This is our third, fourth, fifth, and sixth line of resistance right here. So I would like to see what the market does within these three lines of resistance. I would not be surprised even if the market comes all the way up here somewhere next week and then starts dropping back down, or maybe even as early as Monday just starts dropping back down from over there. When it does, and if it does or when it does, I can expect that the market would probably make even lower lows, and this time maybe actually closing below this. Now, it might not all happen next week. It might take a couple of weeks, 2-3 weeks, but we are looking at this market really ready to go down to the downside. Okay, so on a daily chart, would I go long? Not necessarily. I'm not. I'm holding to my short positions, and I will add more once I start seeing signs that it is actually reversing. Now, because I trade options, I bought options that are like 9 months out because I'm expecting this to be a big rollover when the time comes up. Bought myself some time to let this market, work itself out and really turn things down to the downside. Okay. All right. So if we were to go to, say, let's go to the weekly chart of the market right here. And go here, go to the weekly chart. I want to show you some things. If you look at the weekly chart, you can see that when the market goes up and it has a dip and it forms a lower low, okay, and it really goes back and makes a higher high. It forms a low, it goes back and makes a higher high. Forms a low, goes back and makes a higher high. This is the first time where, it went up, it came back down, and it could not make that higher high. And then to make matters worse, not only could it make that higher high, but it made a lower low. So you can see right here, this area right here, okay, on this area right here, we had a lower high. Now we have a lower low. So this is officially now the beginning of the bear market. Now, we already started seeing that back here, but this was the first leg, wave 2. Now we're in wave 3, and I expect this to go even further down, okay? So that is our look at that on the weekly chart. You can see something similar to that right here, where they did this, it came back up, and then it dropped, all right? Same thing right here. It came down here, went back up, and came back down, okay? So that's what we're expecting it to do as well, all right? So I'm looking at this, and this is telling me we have more to the downside than most people can suspect, okay? If we go to the monthly chart, we get to the monthly chart. All right, so if we go to the monthly chart, I want to point out some things here, okay? And that is, if you look at this chart, this candle right here, this is what we had in January of 2016, all right? Exactly 8 years ago, January 2016, this gray highlighted area, see how the candlesticks is exactly similar to each other, okay? All right? It's like a red body and a long wick at the bottom of it. Same thing right here, big red body and a long wick down here. That was January of 2008, exactly 8 years ago, okay, to the date. What happened in February? We had a little rally, and then the market dropped, okay? And that's what I'm expecting to happen. If we go back to 2000, when the market started going bearish in 2000, same thing, okay? We had the market drop big, came back up. It looked like, oh, yeah, things are looking better. But then the next month, the drop continued, okay? So that was the beginning of the drop, and that's what we're experiencing right now. Also what we experienced in 2008 right there. Even this right here, which is November, same thing. Market looked like it was pulling back, but by the end of the month, it was down, and it just kept on going lower, okay? So I'm seeing this, and I'm saying we are in that phase where now it's done like this. So I expect the month of February to be a month lower. Would we have some rallies going in? Yes. But then by the end of the month, by the end of February, I see this market actually lower than this close right here. Okay? If I was to change this to, say, 20-year daily, I want to zoom in and show you what happened in the month of January in 2008, okay? All right, so this highlighted area, this gray highlighted area, that was the month of January, all right? So we had the market drop, all right? And then we had a push back up. And you can see even on the very last trading day of January 2008, we had a very bullish day. Same thing, we had the next day, the first trading day of February, seemed like the market was going higher, and then the rollover took place. Okay, that is what I see happening right now. Exact similar thing. Isn't it suspect that the very last day of the month, that's when it pushes up, and this could be a bear trap for a lot of people. Okay, so that next week, when everybody's still getting feeling all excited about what's going on, we might see this thing roll over. And the interesting thing is, we don't care about the news because, yes, everybody can say, oh, the Bank of Japan is what caused this, and things are going to be looking nice, and everything is going to go up. But like I always do with everybody else, I say, well, where is 2008? Sorry. I say, what happened on this day right here? Can anybody tell me what happened on January 31st, 2008 that caused the market to rally big like it did that day? The answer is mostly no. Nobody can tell us that, and it doesn't matter because when we look at the candlesticks, we right now there's nothing on here that says Bank of Japan. There's nothing in here that says Russia. There's nothing in here that says China. There's nothing that tells us why this market rallying like this except for candlestick. Candlestick is all we can rely on. And when I look at this, I say this is similar to what is going on right now. So if this repeats itself, we can see that sometime next week. We should start maybe as early as Monday, if not before the end of the week. We should see a rollover take place. Okay, so that is what I'm looking at, and keep in mind some people are still wondering, oh, if we're in a bearish market, how come the market is rallying? Please don't be naive to think that. Okay, we are going to see some rallies, just as you see right here. All right, but month to month, and this is what I mean by if you're looking at this month to month rather than day by day, look at it from a bigger point of view. Month to month, we see the market going down. Month to month, we see the market going down. Are you going to have months where there's going to be rallies, 2-3 months? Yes. But eventually, when it turns down big, and it goes down even bigger. So that is what we see right here. Again, January of 2016 is so similar to January of 2008. The next month after that, in February, we had a lower month. March was even lower. Okay, so month to month, not day to day, month to month, I see this market going lower. That means that by the end of February, I see this market being lower. By the end of March, I see it even going lower than what we see right here. So that's the wrap up for this week. Again, I wish you good trading, and like I always say, remember to trade on the right side with confidence.